Much for staying on. I am Pius Kojobaka, and looking at our stories. Cement sales in the country continue to drop, ending September this year. Well, this is despite the strong pickup in construction activities for the third quarter of this year. There is more in the following Business Desk report. For some, the development can be described as interesting. This is because looking at the fact that the third quarter GDP estimates from the Ghana Statistical Service showed that construction activities have picked up strongly from July to September this year. However, it appears that this has not impacted on cement consumption in the country. This is because fresh data from the Bank of Ghana revealed that the consumption has been declining. For instance, in September 2021, monthly consumption stood at more than 350,000 tons. However, this has been declining over the past years to reach 220,000 tons ending September 2024. There have not been any official reasons coming from the Bank of Ghana for this drop, but some have argued that it could be that most of these construction activities going on were depending on imported cement for their work, or some of the cement firms have not been submitting accurate data when it comes to their sales. All right, so let's bring in the views of the Ghana Real Estate Developers Association. Of course, its Executive Secretary, Samuel Amegaibo, joins us via Zoom for a conversation on the back of this. Thanks so much, sir, for joining me on the marketplace. First off, what would you say were your key highlights for the year within the construction and build industry?
Thank you, Pius, for the opportunity. I think the real estate sector was also not spared in all that happened to many firms and industries who were hit by several, difficulties. But we have survived, and I think it is good that the year is coming to an end, and we will prefer to focus on the years ahead. There's also some changes that are coming in terms of our governance. I think it will all bring some freshness into the system, and it will, in all, give us some room to operate and see how best we can augment the challenges that we had previously and see the way forward.
Exactly. So during the year, we saw that there was some sort of a standoff between cement manufacturers and the trade ministry over pricing of the product. For you, could that have been avoided?
Yes, exactly so. If you had followed us during the discourse, we made it clear that we thought that the minister and the Ministry of Trade's intervention to bring in this LI was a bit premature. We thought that there was no proper or adequate consultation of the industry players before the decision to, pass the LI was taken. And as we know it, between the time it was passed and now, I'm not sure you have seen anything happening in terms of applying the LI to cement manufacturing. I didn't see anything happening. And so we think that was not the best to do at that time. Everybody wanted cement to come down. As a consumer or as a user of cement, I would have preferred that the price of cement comes down. But we have to be fair to the manufacturers because they had very important issues that they raised with government. And whilst we did not see government taking steps to manage the issues that they raised, but was much interested in focusing on partner and LI, we thought that was a bit on the low side. And this LI, as I know it, has not brought anything to us this year. Maybe it will bring some effect next year, I'm not sure. But we thought that was premature. There was very clear opportunities and room for a lot more dialogue before we got to that point where LI should have been passed. And so for us, I think it was a bit premature at that time.
Interestingly, we are told cement sales have, dropped despite strong pickup in construction activities. And I'm wondering what could be accounting for that discrepancies.
There may be several factors. First of all, the purchasing power of the Ghanaian have gone down. People have slowed down on construction projects. If you find out from developers, for example, gone are the days where developers will risk and say, look, let me produce these houses and then go on with the market drive and see if I can get buyers to buy. These days, everybody is on the market trading cautiously and ensuring that at least there must be some signal of purchase. And so they are focusing more on off-plan sales where they market the product online, get people to show interest before they will actually break ground to start even the foundation. So that has perhaps, culminated to the low sales of cement by some of the developers. And then when it comes to the general public themselves, the system was a bit difficult. People were struggling to survive on their own, and like they put it, if I have not eaten and I'm not satisfied in my stomach, I don't see anything about infrastructure development as something which is of a necessity or as important as my personal survival. And so the system was difficult. And so I think most people cut down on investment into infrastructure to seek their survival first and see the way things will go before they want to invest into that. And so that may have accounted for the drop in cement usage.
That's fair. So I want to know your projections for the industry as we enter 2025. And of course, how do we address some of the challenges we recorded this year as we enter next year? What would you say?
I think for industries, a lot of things come to play. There may be some policy gaps. As you may know it, when we're having these difficulties, a lot of us were talking about certain taxes, for example, that we thought could have been seen to by government to bring some relief to operators in the industry, and we didn't seem to have seen that. We were rather surprised to see this year, for example, that the 5% real estate VAT on the sale of immovable properties was brought back, something that was removed by this same government that we hailed them and were so happy about, suddenly found its way back into our books early this year. And we felt that this was no good. And so we want to see that moving into next year, and with the new government in place, we want them to review. I think they have already indicated that there are several taxes that they want to call nuisance taxes that they want to address them. We will certainly believe and sincerely believe that this 5% VAT, for example, affecting the real estate industry will be one of the key taxes that will be taken away from our books. And then we'll also look at things that will help manufacturers. We are heavily dependent on importation for most of our building inputs. However, there are few that are locally produced, like cement, iron rods, and pipes, and all. There are certain cries from these manufacturers. We want to see the government looking at some of this and seeing how best we can help them to overcome the challenges imposed by these taxes on their production. And then we are also aware of the real estate industry's dollar cedi has a lot of dollar cedi relationship, and we want to see some stability into the currency. I am not expecting a sudden drop just because we have a change of government, but at least if we can be assured of some stability moving forward, it will all help us in our planning for the future, and then also better project our cost expenditure moving forward. And so we want to see the new government, taking all these measures on board and dialoguing, engaging stakeholders in the industry, finding out most of the issues that we raised with the previous government that did not seem to have found any resolutions to find a way around it and see how best to implement a more pragmatic, policy direction for us to operate within.
A quick one on this. Is that to suggest that, well, if the taxes you're looking forward to being reviewed is done, that will automatically translate into pricing where the cost of building materials, etc., will be reduced?
Yes, definitely so. It will have something to do with it. For example, this 5% VAT, for example, though that tax is not being paid for by the developer, but it is an added cost to anybody who purchases the property. So if I'm selling a 100,000 cedi house to you, government says that you should pay 5% addition. It means that automatically the price has gone up. I cannot absorb it and say because you are paying 5% tax to government, I'm deducting or I'm giving a discount of 5% so that you'll be able to pay to government. So indirectly, it's a cost addition to the buyer. And so if government took that one off, it helps, a lot of people to purchase. The purchasing power of the people had already dropped. Look, if you go into the books and you find out from mortgage, the firms, this finance houses that provide mortgage for our people, they will tell you that a lot of people are not able to qualify for the mortgage already. And so slapping or adding another 5% means that a lot of people were completely out of the reach of mortgages. And so it really affected us. And so if you take this one out, it means that those who could not qualify for mortgage previously, because of the takeaway of this 5%, it is going to make sure that those people who were taken off or were disadvantaged because of the imposition of this VAT will mean that they are now back on stream and they can go back to their mortgage companies and start renegotiating and see how best they can, come back onto the stream and get some assistance in mortgage.
Executive Secretary of Greater Samuel Amegayibo, thanks so much for joining us here on the Marketplace, and a Happy New Year in advance to you. See you in 2025.
Yeah. Thank you and our viewers as well.
Let's shift focus now to the Bank of Ghana, where they will not be changing the total amount of dollars that it plans to sell to bulk oil distributors of petroleum products for every first 3 months in a year. This was captured in the forward auction calendar for the first quarter of 2025. There is more in this report. The Bank of Ghana in the first quarter of 2024 sold $120 million to the bulk oil distribution companies to aid the imports of finished petroleum products. It was expected that, looking at the fact that the local currency usually comes under some pressure in the first quarter of every year, the Bank of Ghana would have looked at releasing more dollars to support these imports. However, the regulator of the banking sector does not think so. In the auction calendar released last week, it is planning to sell $120 million to these bulk oil distribution firms from January to March next year. One is not sure for now whether, per the Bank of Ghana's own internal analysis, it doesn't think that the cedi will come under the perennial first quarter pressure. You're still watching The Marketplace. Now, Ghana Airport Company has ruled out witch hunt with, and political interference over moves to recover some debts owed by McDan Group. This was captured in a statement issued by the airport company today. Pretty soon, my colleague George Yafi will join me in studio for a quick breakdown on that. But let's move on to one of our big stories we are following up for you this very moment. As the year comes to an end, we take a look at some of the topical issues which made the headlines in 2024. In today's final edition of the Marketplace for the year 2024, my colleague George Yafe finally has joined me in studio for some conversation as we discuss some of the highlights and lows of the year. And of course, you can also join us with your comments and submissions via our socials on Facebook at Joy Business and LinkedIn at Joy Business Ghana. And George, thanks so much for joining me in studio, and good to see you. And Happy New Year to you.
Just a few hours from getting to the new year.
Exactly, George. Yeah. So first of all, before we zoom into the year review, I want you to tell me what more we are learning with regards to the Ghana Airport Company Limited statement.
So you remember yesterday when the developments came out, there were some people who were arguing that this is witch hunt, maybe it was because a comment that McDan passed during the CEO's network. The Ghana Airport Company has issued a statement giving fine details of the debts owed by the group because they are renting out some of their properties to them as well. If you go through that statement, they make that categorical statement that this is not something that is just directed at McDan. But as the year always draws to a close, they go out to companies that have properties on their land and all the rest to try and recover debts. They do a monthly recovery, do a year recovery, and they list a lot of properties around. If you go through the statement, you see that McDan Group has some properties on the Spintex Road as well, and they are indebted to them. If you go through the statement, you realize that the group owes about and according to the Ghana Airport Company, the group owes about $3.9 million. And out of that $3.9 million, they've actually paid about 13 million Ghana cedis. And they insist that per the arrangement with the group, they've not actually fulfilled all their conditions in terms of the commitment to pay all these debts. And that is why they believe that they still have to go. And there's a statement here. And if you try and walk through, and you remember that the statement was made by the group giving an indication that there was a property on the Spintex Road that there's a dispute about it. If you go to the statement by the Ghana Airport Company, they make the argument that Magdan is actually rent out some of these properties out to a third party and is collecting monies from there. And they believe that if Magdan claimed that these properties are in dispute, then why is he going out to do that? If you go through the statement again, they've listed the properties that Magdan Group actually owns, that they've actually rented certain properties or land to them. There's the one is the rent and other fees of the Terminal 1. That sums up to $640 million. If you look at that, they claim that that amount has not been paid into our city component. Also, there's the block factory of the Spinters Road. That's about 5.6 acres, and they owe it's about $1.1 million. Nothing has been paid of the city component. There's also the airport logistics building of the Spinters Road. That's about 10.6 acres. The debt owed there is about $2.1 million. And also there's the Korea Enclave space, and that is about $8,140 as well. And also there's the cargo village and all the rest. If you go through, the airport company actually argues that the group was required to pay about 15% share of the gross revenue, of the monthly revenue of the private terminal to the Ghana Airport Company. Now, for the record, Magdan Group Limited paid only 2 million Ghana cedis on Friday, December 24, 2024, out of the outstanding $3.9 million, and basically arguing that it's only a fraction of that money that has been paid as we speak right now. Also, it's ready to know the Magdan Group initiates some of the lands acquired from the Ghana Airport Company Limited as far back as 2015 under the litigation, and therefore it is requested that the company to, that is the commercial body, to did it and also benefited from some rental proceeds, as I've argued on, and basically saying that these are the facts on the ground. So if anybody think that it's a witch hunt, there's a political interference, that is what is on the ground.
Great. So there is statistics to show, right?
Or data, or more of the facts on the ground as in why they've taken those actions.
All right, let's talk about 2024 and almost coming to a close.
2 hours. If you monitor the international lines and all, you realize that some countries, Australia, actually crossed already
2025.
To 3rd January 2025. Now for this year, I mean, you first want to look at the resignation of the
Finance Minister
Ken Ofori-Atta. After all the back end for the president had to take a decision to let him go. And also want to look at the fact that the Ghana cedi reaching a record 17 Ghana cedis to a dollar, that is $17.65. Another highlight of us. And also you can't forget about KTM on standoff with the cement manufacturers, the back of Ford and all those things that happened at World. Also, you want to look at the fact that the government meeting most of the critical requirements of the IMF program.
Certainly.
And the fan saying that we made some critical progress looking at what we've done so far. Also, I mentioned the city hitting highs. This is a year also that we've seen some significant stability now hovering around 1460 something among the commercial banks. Over the past, and normally in December, you see some pressure a little bit on all those things. Rather, you've seen some significant stability of the city for more than 3 weeks, and that is what we are seeing as well. Also, you want to look at the exit of some global brands. I mean,
it became a topical issue.
Yeah, network also, and of course, the almighty debt restructuring program as well, and how it hit a lot of people, and also government also making progress with these commercial creditors when it comes to restructuring the debt and all those. These are some of the big issues that, and also the launch of Bank of Ghana's
head office,
new corporate head office as well for this year. And these were some of the issues. You want to look at the broader economy, as well. Also want to look at the fact that we've seen a record growth of the economy based on data from the Ghana Fiscal Service, even more than the pre-COVID levels as well, and other sectors that were not doing well as well, they've done too well as well. Also, inflation coming down from the over 50% to now you're around the 20% mark as well. And interesting, if you go through the IMF program and the projections, they're giving an indication that, listen, we are up for some interesting times going into 2025.
All right, so George, you had a great opportunity to cover most of these topical issues. I quite remember in the newsroom. So would you say some of these highlights were indeed avoidable? That couldn't have happened in 2024, and which stories?
Avoidable is quite a difficult thing, because you realize that most of the things that happened in 2024 was as a result of things that happened in 2023, and
translating into
use the cascading effects rolling into 2024. You realize how the debt exchange program impacted badly on the economy as a whole and the debt restructuring. And also, one would say that for me, the biggest thing that happened to this economy was us signing up to the IMF program, because without the fund program, you could have the ideological argument, you could have whether we can do our own thing or not. And I've said this in several engagements that the IMF program is not about the money that we are getting from the IMF. It's about the fact that we are in the program being supervised by some big brothers, and they're signaling to the development partners and investors that, listen, now we are doing things to correct certain wrongs in the economy. We are now more disciplined with the economy and all the rest. So it's not just about the money coming in, because if it's about $3.6 million or whatever, we can go to the market and raise that money.
Of course.
But it's about the fact that you have a big brother in trying to let you correct the ills and the wrongs of your economy. And that is why we're seeing that confidence build, and that's why we are seeing certain things happening in the monetary space and even inflation coming down. Some would link it to the IMF program. If without the fund program, I don't know where this economy would have been.
And George, prior to 2024, we saw the hue and cry about the presence of the finance minister, Ken Ofori-Atta then, even people within his own party and, of course, various industry players saying that, well, Ken has to go. And translating that to 2024, earlier 2024, we saw the president act on that. What message do you think that sent to the investor community and, of course, the business community as well?
I think that when you engage some of the investors, the another argument that was put across was that when you look at the challenges in the economy, was it a Ken Ofori-Atta thing alone, or there was a bigger challenge? He going because some people think that he was the problem may help a little bit, but there was a bigger problem with the economy, and just one individual going away might not be the solution.
All right.
Asking whether he should have gone earlier, maybe that's what someone would say, that listen, if you really wanted the impact to give another person to come in and turn things around, maybe he should have gone earlier than going this year, because he had some few months. What would the new person be able to do as well? So yes, of course, it got to a point where people thought that he was the problem, and therefore maybe he going away, you have maybe a new person coming in, fresh ideas, could turn things around and improve the fortunes of the economy as well. So maybe it came a little bit late, if indeed it's established that he was the problem when it comes to our economic woes.
I'm afraid we have to end the conversation here and, of course, make time for other developing stories. We are following up for viewers. And, of course, that's how we wrap up the bulletin here on The Marketplace with me, Pius Kojo-Baka. We have more stories for you when you log on to myjoyonline.com/business. Do visit the portal and get yourselves updated. Great for serving you. Let's connect at 5 p.m. with Business Live.